good morning, everyone. Today we are here to present direct tax update on budget 2022. First of all, let's see what we will discuss today. We will discuss corporate tax rates and amendment for corporates, taxation for virtual digital company, penalty provisions, faceless assessment, procedural amendment, TDS and TCS provisions, or relief for startup and some miscellaneous provision. So first start from tax rate. As such, there is no change in tax rate in this budget. However, some changes for surcharge for individuals and cooperative society. So government has capped surcharge on long-term capital gain at the rate of 15% on any assets. Earlier, this benefit of 15% was given only on transfer in case of listed shares which was taxable in under section 112A. So the benefit of 15% now is extended to each and every asset on which any person arise long-term capital gain. And next, surcharge change rate to cooperative society. The earlier cooperative society was charged at 12% if
Sagar, you are on mute now. Sagar, you are on mute.
Sagar, you are on mute. Sagar, unmute yourself. मैं उसको बोल के आया. Now you are audible.
अब आ रही है भाई. Okay, so I'm starting from first slide again. First, let's talk about tax rate. There is no change in tax rate except surcharge in case of individuals and corporates. In case of individuals and cooperative society. In case of individual, what government did, they just capped rate of 15% on transfer of any capital assets and when any individual arrives long-term capital gain from such transfer. Earlier, this benefit of 15% was given only in case of gain arise from sale of equity share, listed equity share, which is taxable under section 112A. Now the benefit is extended to any assets, all assets now benefit has been extended. And next surcharge rate is for cooperative society. Earlier the surcharge rate for cooperative society is flat 12%. Now now the rate has been bifurcated in two parts. First, if income is between 1 crore to 10 crore, then rate is 7%. If income exceeds 10 crore, then rate is 12%. The same amendment comes to bring the parity between companies and cooperative societies. Next, moving ahead to corporate slide, the first amendment is related to section 115 BVD. In this section, if any domestic company receive dividend from a foreign company in which this domestic company have invested 26% or more, in that case, if the domestic company receive any dividend from such foreign company, then the rate of taxation is 15%. So by this budget, they have withdrawn the lower rate of 15% and charge this dividend at a applicable rate on the company. Moving ahead is education SAP. What is this? As per section 40A2, if any assessee pays any tax, then this shall not form part of allowable expenditure. Right. So any company pay any tax, then this is a disallowed expenditure, not an allowable expenditure. However, due to due to not mentioning of cess and surcharge but clearly in section 40. Therefore, some assessees was taking undue advantage of this loophole, and they are claiming cess and surcharge as business expenditure. On this issue, there are many judgments, some Bombay High Court and Rajasthan High Court, which are favorable to assessee in the case of Sisa Goa Limited and Chambal Fertilizers. However, recently Kolkata ITT comes with a judgment wherein they favor the revenue. For now, all the litigations have been ended, and through this budget, the government has clearly mentioned that surcharge and cess are also part of taxes, and these are not allowable expenditures. Moving ahead, government has inserted a new section, section 79A. What is this? Currently, what is happening? If any undisclosed income found by department during search, requisition, or survey conducted under section 132, 132A, and 133A. In that case, if any income they found, then assessee can claim their earlier losses or unabsorbed depreciation against such income. For due to this, the government sometime have to lose the revenue. So what they did, they just now bring a new section, section 79A, and in this section they have clearly mentioned that if any undisclosed income found during such a survey, then you cannot set off your earlier losses or unabsorbed depreciation against this income. Basically, in search or survey, government find undisclosed income which is taxed under section 68, 69A, B, and etc., which is very high tax rate. And moving ahead, section 14A. There is no such amendment. They just come with up a clarification. They just added an explanation in the section. Section 14A talks about if any assessee incur any expenditure to earn exempt income, then such expenditure is not an allowable expenditure. Then the assessee have to disallow such expenditure, right? So so what was happening right now? If any assessee, due to any reason, they could not earn any exempt income during the year. However, they made expense to earn such income, but income could not generate. In that case, also assessee is liable to disallow such expenditure while filing return. Moving ahead, definition of slum sale. Definition of slum sale is defined under section 242C. In this definition, the word sale is mentioned. So what is happening? Some companies made slum sale and they take in exchange preference share. So and take the literal meaning of word sale. So now government has widened the scope of section 242C and replaced the word sale with the transfer. And moving ahead to clarification on disallowability of expenditure for pharma companies and offences under law. What is this? Under section 37 talks about general disallowances of expenditure. Section 37 mentioned that if there is any illegal expenditure incurred by company, incurred by assessee, then this expenditure should not be allowed while calculating the tax. Right. So one of things, the medical association, Indian Medical Association said that if any pharma company gifted any freebies or any travel expenditure to any doctor, if any pharma company gives them anything, then this is an illegal activity. So what was happening? So what is happening? This expenditure should be disallowed because this is an illegal activity because of medical association guidelines. But what was happening? Some judicial precedent, this expenditure get allowed. So now they just clarify that pharma expenditure, these type of expenditure are disallowed under section 37. Moving ahead, taxation on virtual digital assets. This is a hot topic of budget 2022. Nowadays, everyone is like crypto, crypto, crypto. So what is this? What is digital asset? In the definition of digital assets, government gave a very wide definition. They covered every type of cryptocurrency, every type of NFTs, and also they reserve the right to amend the definition in future. So for as of now, they cover every type of cryptocurrency which is in existence in now or comes in future. So what is this? if any assessee get arrive any gain on sale of digital assets, then he is liable to tax at the rate flat 30%. There is no benefit of slab and there is no benefit of any other expenditures. You just a very simple calculation: sale minus cost of acquisition. That's it. What you gain, you just have to tax at the rate 30%. Even you cannot, if you arrive loss on such transaction, you cannot set off with any other income, or you cannot carry forward such loss to next financial year. And moving ahead, TDS. To track the digital asset transaction, government raise a liability on the hand of buyer. If any buyer buy any digital asset, then he is liable to deduct TDS at the rate 1% on the value. This amendment inserted through a new section, section 194 as. And such a liability to deduct TDS is arise only in case of if the value of transaction exceeds 50,000 and 10,000, as the case may be. There are case of a specified person mentioned in slide also. And moving ahead, to bring the parity of digital asset, they have also inserted the digital asset in the definition of gift. If you receive any digital asset or cryptocurrency in the form of gift from any person, then you are liable to pay tax under section 56 to 10 also. And further, if you exchange crypto with any other services, with any other goods, with anything, if you exchange the digital asset, then also you are liable to deduct a TDS, and you are also liable to tax at the rate 30%. So now moving forward to penalty provisions, we will discuss here some penalty provisions. Currently, the mentioned penalty provision section 278, 271, 271 AA. These sections currently to initiate the penalty. The power to initiate the penalty under this section are only reserved with AO, assessing officer, that is assessing officer. So now government has widened the scope of these penalty provisions and also mentioned the word CIT appeal, that is Commissioner of Income Tax appeal, now is also powered to initiate these penalties. So they just widen the scope of penalty. And moving forward to section 272A. Section 272A, the penalty arise only in case when you fail to answer any question raised by department or sign any statement. In such case, earlier the limit for penalty was 100 rupees each day, and now they have increased the penalty from 100 to 500 per day. So next slide is for penalty provision under section 179. What is 179? 179 talks about if any company fails to pay any tax due to sick or due to under liquidation, then in that case, company's director are personally liable for such tax liability. However, in the definition in the section 179, there is a word mentioned tax. So some directors taking the undue advantage of this word tax, and they just save themselves from interest and penalty liability. For what budget do here? They just replace the word tax with fees and give an explanation under the section fees, wherein they specifically mention that fees include everything, that is tax, interest, penalty. For everything, director is personally liable to pay if the company defaults. Next is section 234F. Section 234F is charged when any assessee fails to file income tax return within due date. So if you file income tax return after the due date, that is a belated return. If you file belated return, then you are liable to pay penalty under section 234F. The penalty is around 1,000 and 5,000. There are two cases. So what government did, for many times for certain persons, they have genuine hardship for due to which they could not file the return on time. Like if the person remoted at remote location, that like army officers who are located at some location, at this location they could not have access to infrastructure to file the return. So for these type of person, they have just forgo the penalty under section 234F. Next section for penalty. This is not a penalty, but But in section 206 AB and 206 CCE, what the section says, if any person could do not file its income tax return consecutive for 2 years, then if that person receive any payment from any person, then such person is liable to deduct TDS at higher rates, that is 20% or applicable rate on such transactions. For government, just so by this budget, government restrict the scope. Government bring more restriction in this section. Earlier there was limit of 2 years. If you not file return for 2 years, then you are liable to deduct a higher TDS. Now they have reduced the year limit from 2 years to 1 year. Okay. So comes to next slide. Next slide is section 68. What is section 68? Section 68 is a liability to pay tax in section 68 is arise when when you receive any loan or borrowing or any credit from any other person. In this section, you have to prove the source in the hand of your source, right? So like if you take a loan from A, then you have to prove the source of money in the hand of A also. But by this budget, what they bring, in this budget you have to prove the source of source. They have increased the scope of section 68 and they have widened the tax base from this, right? And moving ahead to next amendment. Next amendment is related to bonus stripping. What is bonus stripping? Currently, bonus stripping is applicable only in case of units of mutual fund, whether equity-oriented mutual fund or debt-oriented mutual fund. If you get any bonus share, that is bonus units on on mutual fund, then this bonus stripping is arise. There is a separate calculation or method of bonus stripping. We are not going into it right now. For they have just now they have widened the scope of bonus streaming and extend the scope not only from unit of mutual fund, but now they have extended it to share securities and unit of business trust, like as InvIT, REAT, that is the investment investment fund and real estate infrastructure fund and AI alternative investment fund. And from here, my friend Shwam will take forward the PPT.
Thank you, Sagar. So next amendments are related to faceless assessment. So currently the faceless assessment scheme is applicable on assessments under section 143.3, 144 and 147 only. But in the recent past, the government had intended to cover transfer pricing, DRP and appellate tribunal also under the faceless regime. In this budget, the government had said that since the current faceless scheme is undergoing, current faceless assessment procedures are undergoing amendments, and therefore the appropriate changes in IT infrastructure will also be required. Therefore, they have deferred these three authorities under faceless assessment scheme up to 2024. Moving ahead, next amendment has been brought under section 144B. So currently under faceless assessment scheme, there is no personal hearing opportunity allowed to the assessee, but there had been this case has been very litigative, and various high courts have have ruled in the favor of the assessee, saying that the opportunity of personal hearing should be allowed to rule out such unnecessary litigations. A specific explanation has been inserted under section 144B, saying that if the assessee asks for an opportunity of personal hearing, then he should be given that opportunity. Further, subsection 9 of section 144B has been withdrawn. So let's discuss what it used to say. So subsection 9 used to say is that if the AO has not complied with the procedure mentioned, then the assessment done shall be considered as void. So what was happening is, due to technical glitches in infrastructure, in IT infrastructure, various high courts have ruled in the favor of assessee, saying that since the AO has not complied with the procedure, then therefore the assessment is void. To rule out such to overrule such rulings, the government has withdrawn this section. So moving ahead, to give an opportunity to the taxpayers to declare their missed out income, the government has brought in one new section 139(8)(a), wherein they have given an opportunity to file an updated tax return within a period of 24 months from the end of relevant assessment year. However, various conditions have been prescribed where the assessee cannot avail this option. So such conditions are like if on filing of updated return, your return comes out to be of a loss return, or it decreases your tax liability or increases your refund, or if any search or survey has been conducted on you, or where your assessment or reassessment is pending, then you cannot avail the benefit offered under this section. However, it is to be noted that under this section, the assessee is required to pay an additional tax of 25% or 50% depending upon the periodicity of filing of return, meaning thereby that if the assessee has filed his return, updated return from 13th from within 1 year from the end of relevant assessment year, then the additional tax rate that shall be applicable on him will be of 25% of aggregate of original tax and interest payable. However, if the assessee choose to file an updated return from uh, 13th month to 24th month from the end of relevant assessment year, then the tax rate that shall be applicable will be 50% of aggregate of original tax and interest payable. It is noteworthy that these additional tax rates shall further be increased by the surcharge, applicable surcharge and cess. Moving ahead, next amendment has been brought under section 248 and a new section 239(a) has been inserted. So 248 says that if any person has made any payment to a non-resident and has made any payment to non-resident other than the interest income and deducted any TDS on it, and the person is of the view that the TDS was not to be deducted due to any reason, for example, if the contract gets cancelled or be it any reason, then he can only approach CIT appeals, and he has to mandatorily file an appeal with the CIT appeals to claim such refund. Currently, there was no provision to approach AO for this. By insertion of section 239(a), the government has given an opportunity to the assessee that yes, he can in such cases he can approach AO to claim the refund amount. Moving ahead, next amendment has been brought under section 263. So 263 gives a revisionary power to CITs, CCITs and PCITs, where they are of the view that the assessment done by the AO is erroneous and prejudicial to the interest of revenue. However, currently there is no clarification regarding that which authority has the power to revise the order of a TPO, that is transfer pricing officer. So by amending this section, the government has stated that yes, CITs, CCITs and PCITs have the revisionary power under section 263 to pass a revisionary order against the TPO. Moving ahead, next amendment has been brought under section 133A. So 133A talks about the survey. So currently the power of conducting a survey has been restricted to the investigation wing and TDS wing officers. But to widen the scope of this survey, to widen the scope of this section, to widen the scope of this power, the government has made an amendment and has said that this power shall be applicable to all the divisions irrespective of their wing. Next amendment has been made with respect to litigation management. So to reduce and effectively manage the litigations, the government has brought in new section 158AB, wherein the government has proposed to form a collegium of 2 or more PCITs and CCITs or CITs, wherein they will oversee. So let's understand this by an example. So if the department wants to move an appeal to High Court or Supreme Court against me, then they'll have to take permission from these authority that whether we can file an appeal or not. So these authorities will check whether any similar case is already pending with High Court or Supreme Court or not. If a similar case is pending, then the CIT will take the assessee's permission, meaning thereby my permission, that if I allow them, then they can put on hold the proceedings for time being, and once the order comes in a similar case, then they can move ahead to file an appeal. And this appeal the department will file only if the judgment in High Court or Supreme Court similar case comes in the favor of revenue. However, if I decide not to give this permission, then the department has its power to move an appeal with High Court or Supreme Court. This procedure was already there in the Income Tax Act, but through this section, the government has intended to frame a specific authority who will specifically look into these cases to regulate the litigation cases. So next amendment has been brought under section 194 IA. 194 IA says that if any immovable property has been transferred, then the buyer is liable to deduct TDS at 1% of the sale consideration. However, under section 43CA and 50C, the term of stamp duty value, the condition of stamp duty value has been used. So to bring this section in parity with these two sections, 43CA and 50C, the amendment has been brought in this section, which says that now the buyer will have to deduct 1% of the TDS on transfer of immovable property if the sale consideration or sale consideration or stamp duty value, whichever is higher. So next section 194R has been inserted, wherein which says that if any person receives any perquisite or benefit in respect of his business or profession, then the payer has to deduct TDS at the rate of 10% on the amount of the perquisite. If the perquisite or benefit is given partially in kind and partially in cash, then the payer will make ensure that the TDS amount has been appropriately deposited with the government. There has been a limit. The government has kept a limit of 20,000. That is, if the perquisite or benefit exceeds the amount of 20,000, then only the payer is required to deduct the TDS. So next amendment has been brought to extend the sunset clauses mentioned under section 80 IAC and section 115 BAB. Section 80 IAC is applicable on the startups, which says that if you are a startup, then you can claim 100% deduction of your profits within 3 consecutive years from a bucket of 10 years. And section 115 BAB says that if any new domestic manufacturing company comes into existence, then it may opt to get taxed at a reduced rate of 15% by foregoing some deductions. So the last date was under section 80 IAC was 31st March 2022, which has been extended by 1 year up to 31st March 2023. The similar case has been under the section 115 BAB, which says that the last date for new manufacturing companies to opt for reduced rate was 31st March 2023, which has been extended by 1 year, that is March 31st, 2024. So next amendment has been brought under section 43B. 43B says that there are certain payments that shall be allowed to you on actual payment basis. So one of the payment mentioned under section 43B is of the interest amount. That is, if you take a loan from any NBFC or bank or financial institution and pay interest on that, then you will get the deduction of that amount, that interest amount, only if you have actually paid that interest amount to the bank. If you have converted that interest amount into loan or any other advance, then such deduction of interest shall not be allowed. Meaning, if you have created any provision of interest, then the same shall be disallowed. Or if you have converted the interest amount into loan or into any sort of advance, then the same again will get disallowed. So what was happening is what they were doing is they were converting the amount of interest into debentures and were claiming that the conversion of this amount of interest into debenture is a valid ground to claim the deduction under section 43B. So by finance bill 2022, the government has inserted a clarification under section 43B stating that this is not a valid ground and conversion of interest into debentures or any other sort of like instrument shall not be considered as actual payment. Moving ahead, so as my friend Sagar in his first slide told that the government in this finance bill has tried to bring cooperative societies in parity with the companies. So with the same intent here also, the government has reduced the AMT rate to 15%. That is, earlier the AMT rate that was applicable to cooperative societies was of 18.5%. However, the companies were paying MAT at a rate of 15%. So to bring both these organizations to both these persons in parity with each other, the government has reduced the AMT rate for cooperative societies to 15%. So next amendment has been brought in consideration of COVID-19. The government has said that if any person has received any amount for the treatment of COVID-19 illness, then such amount shall not be considered as an income in the hands of the receiver. The last amendment is with respect to the business reorganizations. So business reorganization has been a very litigative issue. That is why because so what happens is if any company tries to reorganize its business, then they have to take some appropriate approvals from NCLT, and NCLT's approval comes usually within a span of very long period, and by the time what happens is department starts their assessment proceedings on the predecessor company, and when the department passes its assessment order on the predecessor company, by that time the predecessor company has ceased to exist. So in various cases, the various courts have ruled in the favor of the assessee, stating that since the predecessor company is not in existence, therefore the proceedings are null and void. So to overrule such rulings of the high courts, the government has very specifically stated that if any proceedings are made on the predecessor company, then they will be treated as if they have been made on the successor company. Also, the government has given an option to such organizations to file a modified return within 6 months from the date of NCLT order. That's it from us, guys. If you have any questions, we are very much open to take those.
Hello, Shubham, are we audible?
Hello?
Yes.
Shubham or Sagar, are we audible now?
Yes.
Yes, sir.
Yeah, can you go back to 194R? That is a section for TDS. So can you explain this once again?
Sure, sir. So, sir, 194R says that if any person who is involved in any business or profession has received any perquisite or any benefit, then the payer who has paid such perquisite or benefit is required to deduct TDS at the rate of 10% only if the value of such only if the value of such perquisite or benefit exceeds 20,000.
Can you give me an example? कोई ऐसा सोचा तुमने example क्या होगा? मतलब जैसे AMRG business कर रहा है,
हाँ जी
ऐसे कुछ हुआ और AMRG को किसी ने कुछ perk दे दिया, नहीं?
सर, जनरली बिजनेस में हम लोग तो AMRG तो प्रोफेशन में ना, तो मैं आपको बिजनेस का एग्जांपल दे सकता हूँ। जैसे अगर मान लो मेरे पास कोई कंपनी की फ्रेंचाइज है और कंपनी को लगा कि मैंने सेल्स प्रमोट करी है, तो उसने मेरे को कोई फॉरेन का ट्रिप ऑफर कर दिया या कोई फॉरेन का ट्रिप दिया, तो उस केस के अंदर जो भी बेनिफिट होगा मेरे को, जितने का भी होगा ट्रिप, तो उस अमाउंट पे कंपनी को TDS काटना पड़ेगा 10% से।
अच्छा, ओके 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 ओके।
और
तो अभी
प्लस
तक
इसके
क्या
अंदर
होता था?
कंडीशन,
अभी जैसे मेरी कंपनी है, उसको बहुत सारे ऐसे गिफ्ट मिलते रहते हैं, तो अभी
हाँ
तक
जी
वो इनकम में लेते होंगे? इनकम में लेना चाहिए उनको? इनकम में तो लेते नहीं होंगे, आइडियली लेना चाहिए।
सर, परक्विजिट सेक्शन 28 के अंदर स्पेसिफिकली कवर्ड है कि अगर आपको बिजनेस और प्रोफेशन में कोई भी परक्विजिट मिलता है तो दैट शैल बी ट्रीटेड एज योर PGVP इनकम।
तब उस पे समझ लो मैंने उसको 1 लाख का ट्रिप दिया तो 10,000 रुपए उसका TDS काट के जमा कराऊंगा,
हाँ
व्हाटएवर
जी,
ग्रॉस अप करके जो भी वैल्यू बनेगी यार, जैसे
ये सर। बट इसके अंदर 194R के अंदर लिमिट भी दे रखी है दैट दिस सेक्शन विल नॉट बी एप्लीकेबल ऑन इंडिविजुअल और HUF हु आर इन्वॉल्व्ड इन बिजनेस और प्रोफेशन एंड देयर ग्रॉस सेल डज नॉट एक्सीड 1 crore in case of business and 50 lakh in case of profession.
अच्छा, तो फिर मैं काटूंगा कैसे? आई विल हैव
नहीं,
टू टेक
अगर
अ
मेरी
डिक्लेरेशन, हाउ विल आई चेक दिस कि उसके ऊपर एप्लीकेबल है नहीं है?
सर, वो तो डिक्लेरेशन लेनी पड़ेगी। मतलब जो भी बंदा आपको परक्विजिट दे रहा है, he'll have to take a declaration from you.
कि आप इसमें एप्लीकेबल नहीं हो, आप इसमें एप्लीकेबल
हाँ,
हो।
मतलब पूछ सकता है। बाकी अभी इसके ऊपर कुछ एज सच इतनी क्लैरिटी आई नहीं है।
अच्छा अच्छा। और जो 194IA है, सो बेसिकली इट्स लाइक कि सेल्स कंसिडरेशन कई बार स्टैम्प वैल्यू ड्यूटी वैल्यू से डिफरेंट हो जाती है।
हाँ
एक
जी
तो उसमें तो वैसे भी टैक्स लग जाता है ना. इफ माई स्टैम्प ड्यूटी वैल्यू इज 80, लेट अस से स्टैम्प ड्यूटी वैल्यू इज 1 CR एंड सेल्स कंसिडरेशन इज 80 lakhs, तो ऐसा होता है 20 lakh इज टैक्सेबल इन हैंड्स ऑफ बोथ, ऐसा कुछ होता है ना.
हाँ जी सर.
तो अब इसमें कह दिया TDS आप हायर पे काट लो.
Yes sir. Sale consideration और stamp duty value whichever is higher.
हाँ ठीक है, समझ गया. ऊपर करिए सर,
Sorry.
ऊपर करना वो जो रिटर्न फाइलिंग का था एडिशनल टैक्स वाला.
हाँ जी.
इसमें लॉस रिटर्न नहीं है, नहीं अपडेटेड है. सो बेसिकली यार अब व्हाई विल एनीवन गो फॉर इट. मतलब अब तुम कह रहे हो कि मैंने अगर एक विद इन 1 ईयर मैंने मार्च 21 रिटर्न मार्च 22 तक फाइल करी है, मैंने 10
हाँ
लाख
जी.
टैक्स 10 लाख की इनकम शो करी है, मेरे को 10 लाख की इनकम और लगा कि भाई ये भी शो करनी थी, राइट?
Sir, 1 year from the end of relevant assessment year होगा.
हाँ, तो मार्च 21 की रिटर्न मेरे को बाद में रियलाइज हुआ, मतलब अगले साल जाके अप्रैल में, कि भाई ये 10 लाख की इनकम मेरे से एस्केप हो गई है.
हाँ जी.
तो अब मेरे को उसकी रिटर्न मैं दोबारा अपडेटेड रिटर्न फाइल करूंगा सेक्शन 139(8)(a) में, है ना?
Yes sir, correct.
और उसके अंदर 10 लाख पे 3 लाख रुपए टैक्स दूंगा, 4% सेस दूंगा और 25% सरचार्ज दूंगा.
हाँ जी.
प्लस इंटरेस्ट.
Plus interest.
इंटरेस्ट तो देना ही देना है.
हाँ जी.
मतलब मैं सोच रहा हूँ
सर,
अगर
आप-
ऑफिस बोल.
सर आप क्या करोगे, 10 लाख की इनकम को आप नॉर्मली कैलकुलेट करोगे, उसके ऊपर जो भी आपका टैक्सेस बनता है आप वो कैलकुलेट करोगे.